I'm Steve Abbott, Head of Government Affairs and Public Policy at Gusto. We're really excited to be able to moderate this panel. So the truth is, we live in a very complicated world, and we are constantly dealing with changing regulations promulgated by governments at all levels with relative, risks to a business owner's noncompliance. It's virtually impossible for a business owner to understand the actual impact of all these regulations on their business. So to understand this new compliance landscape, we did a survey of owners and accountants. And so I am not going to be pontificating today on public policy or what's happening in Milwaukee, but I have an esteemed panel of your colleagues to discuss the results of the survey. And so we have Sarah Prevost, founder, Mintage Labs, The Proper Trust, Jeff Wilson, founder, GovieRates, and Ramona Cedeno, CEO of FiBrick. So we have a couple of themes here, but the general, sort of through line, I think Liz addressed this earlier in her speech, is there's a clear opportunity for accountants to give their clients peace of mind because of this difference in understanding of perceived risk to their business. And so bear with me for a little bit when I explain each of the slides because they're a little bit dense, and feel free to ask any questions for clarification because, we had to do a quick cut on these, and so we're still kind of digesting. But, to go back to that theme, is the difference in percentages here are the difference between owners' perception of risk and accountants' perception of risk. So, for example, 8% more business owners rated responding to tax notices from government entities as very risky, which is 8% higher than accountants rated that same behavior. And you see the different percentages across the board and how, consistently business owners are rating different aspects as riskier to their business than their accountants, regardless of whether or not they have an accountant or not. And so, question to the panel, can you give us a specific example from your experience about how you would explain the difference between business owners and accountants' perception of risk? Start off with Jeff.
Thanks, Steve. So I think the perception is based on experience, right? So, the one thing that accountants see, we've had so many clients, we have a lot of experience seeing what can and what can't happen, and clients don't have that perception, so they don't know what's there. Well, we kind of always say in boxing, it's the punch that you don't see that knocks you out, and that's the thing about small business owners. Sometimes they don't see it, but us as their trainers, we can see that and help them through that.
Ramona?
Sure. So I totally agree with Jeff, and I want to add that in the case of the business owners, they haven't been exposed to some of these situations that we see every day, and in general, when you don't know something, when you have lack of knowledge or expertise in something, it can be scary and it can create anxiety. For us, we have been there, done that. We know what the outcome is. There is no reputational risk. There is no risk of operations being stopped when you have a compliance issue. And we know that in most cases, tax agencies are friendly, right? They sound scary before you talk to them, but in a lot of cases, if you voluntarily disclose that something wasn't done and you take responsibility for it, it is solvable, and we know that. The business owners a lot of times don't, and that's probably why we see that gap.
Sarah, anything you'd like to add?
Well, a small bit is, like Justin brought up, we're like our business owners. We're in multiple states. Something kind of funny is I live in Oregon, and we often get a lot of notices to our place in Florida, and my business owner often raises her hand, oh, your tree hugger state just gave me another paper notice. So we see this, at least she tells me about it, but we often find that our clients don't, and then we have to be reactionary for it, so yeah.
Great, thank you. On to the next theme. So the difference between a won and a lost client is how much they care about their books. So here, a way to explain this is this was the differentiating factor between owners with accountants and without accountants. So pretty much across the board, owners responded similarly in terms of what was important or risky to their business, except for this one where there was a clear gap between owners with accountants and without accountants that rated, so 53% of owners with accountants rated that keeping with accounting standards is very important versus 41% without accountants said it wasn't as important. And so, to the panel, why do you think conforming with accounting standards is the differentiator and perceived risk between owners with accountants and without accountants? And, even further on, what are the actual real-world implications of not keeping accurate books and, another potential opportunity to educate your clients? And so I'll throw it to Sarah.
Well, this is an interesting one because mostly messy books often lead to overstated income, so you're not compliant there, or expenses. And then often we find that you need a loan, or you need some sort of, there's motivator behind it, and it's your own personal business. You need a set of books that allows you that opportunity. And if you are the 41% without, well, we're here.
Jeff?
Yeah, I think this one's simple. This is growth, right? The small business owners that use accountants, that 53%, understand that accountants are essential to their growth. Those that don't have it, that 41% without accountants, I would probably say, how far can you grow without having accounting standards that conform, your financial statements conform to accounting standards? It's going to be hard to get a lender, vendor capital, even at this point where you have so many systems being able to look at your books and tell if you're a viable candidate for capital. It matters. And so what you see is, I would probably bet those are the organizations that's not growing. It's key to your growth. It's key to your ability to continue as a small business concern. And they just probably not growing.
Yes. Ramona?
First, I was expecting this number to be higher, that the business owners with accountants would think it's very important that this number would be in the 90s, because we tell them it's important, right? But it's still high, and I think that part of the reason is that when they first come to us as potential clients, they already care a little bit about their books. And that makes a difference between winning a client and not winning the clients, is how they come prepared for this, to receive this information and this service. In terms of why it's so important to have clean books, I mean, we see this every day. We work with a lot of startups that are VC funded, and we take them, let's say in year 2022, 23, they become our clients, and all of a sudden a VC is asking for the last 3 years of financial statements. And oops, we don't have them. And they come to me and say, can we get them done for the last 3 years? And I say, yes, it's going to take like 3 months, and it's going to cost you a lot of money. So yes, it's very important to keep books clean, and we saw this during the pandemic when they had to apply for grants or for loans, and a lot of them couldn't participate in those opportunities because of this lack of organized financials.
That's an excellent point. Next slide. Getting applicable tax credits and deductions is very important. This seems like a no-brainer that their clients would appreciate accountants, or even not, but ensuring that they get, every single deduction credit they're eligible for to sort of minimize their tax burden. But this does seem to be like a value add, and a disproportionate value add that you can sort of offer your clients is like, okay, I am looking out for you, ensuring that you are getting every dollar that you're eligible for, right? And so to the panel, would love more examples from your own experience about how you've leveraged your knowledge of tax credits and deductions to bring greater value to your clients, and also would love any experience you've had utilizing Gusto R&D tax credit services. And then, let's go Sarah.
Okay. I actually recently received a lead. It was a tech company from Gusto. And obviously, it was a messy set of books, out of tax compliance. The tax person was based out of California, didn't know the local tax structure. So we had a lot of stuff to clean up. And interesting enough, they were like, so should I do this R&D thing that keeps popping up in my dashboard? I was like, well, yeah, why don't you give it a go? And clearly it worked for them, and they're in the process at this moment. But it was nice that they had that moment, and we could have the conversation, and it was easy for them, where otherwise it wouldn't have even been a forethought, because I service the R&D in some other segments, but not that particular one. So that was really a great opportunity. It served a lot of other clients. So I appreciate it in that example. You?
Mona?
Sure. You'll be happy to hear that a lot of our clients, I hope you're happy to hear, a lot of our clients that use Gusto they just go for the R&D credit, and then I find out, and I'm like, oh, really? You did that? Thank you. But it's very, for us, it's great to have this knowledge in the tax space, because when a client comes to us for advice, or as a potential client, we can talk about the R&D credit, and we can talk about making the 83B election, and talk about the small business tax exclusion, and it makes us sound so valuable already just giving this information. And with the R&D credit, especially having a partner like Gusto that we can say to the client, offer to the clients, it's great, because as much as we can talk about all these credits, we don't always service or provide the support to apply for the credit, right? Some of these are complex, and we are still a small team. So the fact that Gusto provides this for us is invaluable, and a lot of our tech companies use it, the service.
Excellent. Jeff, anything to add?
Yeah, I think that is extremely valuable. I think that when right now, every taxpayer wants to save and get deductions. I think that tax credits are the cherry, per se, on top of the ice cream. That's the next stage, right? They're expecting deductions, but as practitioners, if we can bring in credits into that conversation, what's available, it just makes us that much more valuable, and that 74% is likely seen that benefit of their trusted advisor bringing in the tax credits into their scenario. I just recently had a tech startup 3 years in, and they were behind on their payroll liabilities. And I was like, you're a startup, where's the research credit? They didn't have an accountant. And I was like, you shouldn't owe the IRS anything. You should have just took the R&D credit. And we were still 3 years in. You can go ahead and fix this. And now we're working on, fixing that out. So that's that extra added value where I feel that tax credits that we can really lean into as practitioners is obviously using Gusto even more to add value to our clients. So that's a big opportunity there for us. That's 65%.
Excellent. Any examples of clients bringing you questions around why or why not they are eligible for certain tax credits or deductions you can think of, and how you have to educate them on sort of explaining different things?
So our clients are always asking us, generally every practitioner gets deductions, right? And clients typically hear about credits off the street. Maybe
right.
It's like almost barbershop stuff.
I'm thinking of the ERTC and other ones that have been in the news recently, and been a lot in the politics, a lot of fraud, and so that's what I was following, and I asked that question.
I just got today, actually, someone forwarded an IG link and said, Ramona, I'm sending this to you to see if I can do this for my company. And I'm like, what is this? Something about trust and creating a trust. And I'm like, I don't know, I'll look into it. But yes, they come to us for anything that's tax related, right? And they expect us to have the answer. So I also expected this number to be higher. I was like 99%. But yes, it's key that we are guiding them, right, to the right resources and giving them the information, because we are adding value. We want to add value.
Ramona, is it only Instagram? Because I swear I get TikTok all the time for deductions.
Not TikTok yet.
I'm going to send them to Jeff. You handle them.
You don't want to send them to me.
All right, well, thanks, and we'll go on to the next one. All right. So this is one we're going to juxtapose the responses from the accountants and owners with and without accountants. But, this is kind of a surprising one, right? Owners with and without accountants think that, paying taxes on time is very risky for my business, or not, and yet accountants are like, no sweat, or at least half of them are. It's not as big of a problem. And so why is it that individual business owners, even more so with accountants, have a greater fear of paying taxes than those without, and then even more so than accountants themselves? So go for it.
I feel like you're a bit immune because you get a volume of notices.
Right.
That's, to be fair, from our side. But the question I always have to ask, is that the first notice? Because it looks like it's the second notice. And then the risk gets higher because it looks like a distraint warrant or something, harder language and penalties. How about you?
I think this reflects that we're all doing a pretty good job of scaring our clients. With 63% of the owners with accountants, we're doing a great job. I think this is about the fact that when you have an accountant, you have someone in your ear saying, hey, this is extremely important. We, as accountants on this 49%, we have great perspective, but we're pushing that 63 to be compliant. And so, as my mother would say, I have to put the fear of God in you sometime, and that's what's happening there on this 63%. And this 55 without it, the remainder of that, they need a little bit of fear. And what this does is going to help businesses be more compliant to not fall into dark holes of non-compliance. But that's where I think is where that's coming from, and with that experience they're getting from is their accountant in the area saying this is important. But that 63% that allows them to run smooth businesses. You got to have that type of fear in order to keep it going.
Ramona?
Yeah, so as much as we know that these notices can be resolved and it's going to cost a few $100s, a few $1,000s, we also make our clients aware of everything that's out there that can happen, right? It's like doing everything by the book. And when you go by the book, you have 1,000 things that you should be aware of. So our clients know that if they misclassify contractors, something might happen. It might never happen, but they know of it. And we go through that process as accountants and as trusted advisors. So the business owners that have an accountant that informs them of these things is going to be aware of the risk, the potential risk, as remote as it can be.
All right, to the next topic. So is there an opportunity to move to subscription services? And so the general theme here is, the accounting profession is shifting and adjusting, and, the types of services you offer and the value proposition you bring, this is probably one of the reasons why you're here. But then within that, I think, since you are providing a lot broader services than what core accountants typically did for decades, rethinking the pricing model and adjusting it sort of how to bring the value you had and the services you provide. And, one of the reasons why we kept this in, even though it's a bit sort of compliant adjacent, but still, stays along thematically was, Jeff said this is a spicy take. And so I'll turn it over to Jeff to give his spicy take and let the others respond.
So this is a tough one, right? So I think that industry-wide, right, we've been having a pricing conversation, and subscription pricing is a part of our model. It helps with consistent cash flows, et cetera. So I do believe there's a space for subscription pricing, but I think that we also have to be very careful, and I'm really, as Gusto says about the community, is that we have to be very careful about what we make subscription pricing, because we need some consistency in the service that we're providing. It's very hard in advisory when you don't know the scope to do subscription-based pricing and pretty much lose your shorts, right? So I think there's a great opportunity, but I think we have to work a lot harder on getting a consistent workflow of our solutions in order to do subscription pricing. Now, I'm going to sound old school, and by the way, I only have one gray hair, but I'm going to say one, it's right here, is that I think that there's a bit of subscription pricing that can happen, but there's going to be a little bit of hourly billing on some of the things that we really can't, kind of forecast. I think hourly billing is still in play. And there's some other things that we can do for consistent cash flow, like subscription pricing. So.
Ramona, Sarah?
Since you opened the hair conversation, this is all natural, by the way, okay? Yes. I love subscription model, and I think I was doing this before it was before I knew it was a thing, because we have monthly retainers for most of our services. Now, the key is, and I agree with Jeff, is knowing what's in and what's out. So we have different tiers. There are clients that will say, I want to be able to text you anytime. And I'm like, I don't want to include that in any of my packages, but I make that exception for a few clients. I really love this model. I know it doesn't work for every project, especially during the cleanup phase or clients that are in fast growth phases, which happens a lot in the tech startup space. But as soon as we can move them to a subscription-based model, I do that, and we do that as a firm. And I still think that we don't have the pricing. We don't have it right yet, but we're working on it.
Sarah?
I've, like Ramona, I have been from the get-go, out of the gate, subscription-based pricing. However, there are circumstances that deem alternative ways. I do feel like Liz brought this up in the sense of compliance. There's opportunity for us that's a little different. And so I have structured a price structure that's a flat rate per state. With a per employee, so similar to what you get with an Ignition integration. But I've done it that way to basically set the bar a little bit higher and allow myself opportunity. Now, if I have to go outside of it, I'll have to rethink it a little bit, to Jeff's point. But it at least gives me an opportunity to set the bar and allow the clients to understand this is not easy. What you're asking is a lot of time and energy. And to be compliant outside of our regular subscriptions is a lot. It's a lot of tailored services is the way I describe it. So,
Great. All right, and on to our last theme. What's ahead and how should accountants respond? So, good question. Will mandatory retirement enrollment be a big lift for small and medium-sized businesses? A little bit of context here. 17 states have passed auto IRA bills. If you're in a state that does not have one, it's essentially the state requires employers of a certain size, typically having 5 or more employees, that the business owners either offer a retirement plan, such as a 401k, or enroll their employees in the state-offered IRA. Nearly 20% of accountants think that mandatory enrollment will be a big lift for SMBs, and they'll have to provide support to comply. Conversely, business owners are less concerned about this compliance requirement. And so just by coincidence, we have 3 different states represented with 3 different plans in different phases of implementation. And so Sarah from Oregon, which was the first state auto IRA, requires employers with 1 or more employee to either enroll in the state plan or offer a qualified defined contribution plan or face potential penalties. Jeff from Maryland also has a state auto IRA. However, there is no formal enforcement or compliance mechanism. Business owners only get a rebate on their state licensing fee. And then Ramona from New York is implementing an auto IRA subject to employers with 10 or more employees. Board is just meeting and they're still standing with their plan, but I believe next year we'll start requiring compliance. All right, now that you've gotten all that, I think it's interesting and sort of like, in each of the panelists would like to talk, and starting with Sarah, and sort of like the confusion around compliance, and then Jeff around sort of like a different sort of calculation with advising his clients, and then Ramona just sort of any potential concerns she has about advising compliance in the new plans. So, Sarah.
boy, this was a fun one. Yeah. Right after sick pay, then we get this one. And it started out with a number of employees, and it shrunk down. And now we're down to 1. So to have the conversation with an LLC, with an S Corp on top of it, now you're W-2, and guess what? Now you have to do your 401k. It's an interesting conversation to have. It's not something everyone wants to digest and being told what to do. The state plan is also not a fun one to be integrated with at times. I feel like it's an undervalue, but it is offered out there. We have a state plan that you can option. I choose to do with direct integration. We had a gentleman in Chicago out of compliance for a long time. And so finally, I got one of the integrator partners to get on the line with me and help me get this person front and center and say, look, you must do this now. And I feel like more and more as we see more of these policies come into play in the states, and I'm living and employing in quite a bit of states that have to have this, we have not just lead with the benefit and the compliance, but the human side of it, and what does it mean to those employees? Because as we saw earlier, it's really important for that wage gap, and you have to have that 4-point-something% player on your team. So, yeah, I mean, I'm immune to it at this point. I'm like, oh, okay, it's in the dashboard. I see you have to do it, or I know about it. I figured it out. But I expect it to be across the nation eventually at some point. So,
Jeff, thoughts on how you advise your clients?
So this is a big item for us. I think one thing, it's great, and I can't stand compliance in general like most people, but I think it's great that we have the option and that small business employees can get retirement plans. I think that's great. It's that people have that opportunity. For us, it's a mid-sized lift. One of the things when we do a lot of professional service firms, and their pricing, their wages are based on contracts that are fixed for the next 3 to 5 years. So when we hire a person on one of our clients, pretty much we know for the next 5 years what their raise is or isn't going to be, because it's based on a fixed price contract, in government contracting. So it's a big lift in the sense of being able to, incorporate that into the cost structure for our clients. So it's a mid-sized lift for us, but what it does force us to do, it makes us even more the trusted business advisor, because they're asking us, how is this going to affect the value, the profit on our contract? Because now this, what we call in government contracting, fringe benefits, now the fringe rate is affected by these things, and that's what goes into contracting. So for us, it's a mid-side lift, but it's a great opportunity for us using some of the things we even saw today. I'm so psyched on the new Gusto tools that we can actually incorporate that in. So it makes it a little bit lesser lift with the technology you guys are coming with, but it's a lift that is going to be there and makes us better advisors in the long run.
Well, New York does everything the IRS does, everything California does, and then its own thing, right? So we're in trouble. We have a lot going on in New York, and then the challenge that we have is that the clients or the business owners, a lot of times are not even aware of all these changes. I don't think New York is investing a lot in IG or TikTok or so like how do business owners know of all these rules? Anyone here from New York besides me? No? Okay. Oh, oops. So I think my biggest challenge is when a client comes to us and they have no idea of all these new rules, and or even if they exist, there isn't a clear process to implement or to enforce them, right? So there are all these things in New York City and New York State, all this family leave, the harassment training, all of these things. And when you talk to a client about it, they're like, oh, I didn't know about that. No, my friends are not doing that. My peer business owners are not. So it is going to be challenging to assist them, advise them on implementing all of these new requirements, because the fear is not there. When it comes to that, it's not yet there. We have to kind of create that type of fear in them to say, let's do things right. Now, the good news, I think, is that when it comes to retirement planning, New York business owners are a little ahead, I want to think. A lot of our clients already have these plans. I had it for my firm when I had one employee 7 years ago. So a lot of our clients do implement retirement plans early on. But of course, the Secure 2.0 has a lot of other requirements that we have to look into.
Great. And so remarkably, we have a little bit of time left, so I'm going to spring a lightning round on our panelists. Oh, it's a really simple question. I'm sure you have something to say here, but, knowing what you know now, after going through the results, and even if it's not in the results, what's your number one compliance concern going forward? Sarah?
Paid family leave. How to best protect what I don't know that it's going to come at me with each state, because jurisdictionally and statewide are two different things, especially in Oregon and in Washington. And really getting comfortable with saying, yeah, we'll have to look into that, and we're going to have to price a separate engagement for that. So,
Jeff?
I'm picking two. So I think I gotta steal one. So one of the biggest compliance concerns I am concerned about is BOI. In the future, BOI is the one that I'm worried about the most because we can't seem to make a
Does
decision.
anyone know what BOI is? Beneficial ownership
They don't-
information required by FinCEN. Okay, just want to be clarified here.
He did that great. You see how he just whipped it out? So, yeah, BOI is going to be the reporting of that and how firms choose or choose not to do it. We seem to have this argument, is it the lawyer's job, the accountant's job, and in the middle is the customer. So that's my first one. And then the 1.5 is, I am concerned about the future EIDL, ERTC audits that eventually catch up for our clients in the future.
I'm so glad you asked this question because I want to talk about one issue that we haven't talked about. But that my biggest concerns when all these clients or business owners are registering in multiple states because they have employees in those states, but they are not complying with other requirements related to income taxes. And the question around, do we need to allocate taxable income in those states because they have employees there? Do we need to register with the Secretary of State because they have employees there, but they don't have revenue? I have to come in and figure that out, right? And the clients are not ready for that type of advice or to cover that cost. And a lot of times, these things don't happen at the same time. They go to GOSTO, they register because they are not going through me, like in the case of Sarah. So all your clients go through you. My clients they're self-sufficient in a lot of cases, so they register in all these states, and then I have to deal with the notices that we're talking about before.
Well, that's all from us, and we're going to give some time back. So go get a smoothie and a little bit of an exercise break, but please give a hand for our panelists.
Thank you.